What's going on, everybody? It's Stas here. So the stock market had another choppy day today as the S&P 500 pretty much broke even, up only 2 points. The Dow Jones went up 130 points, up 0.5%. And on the flip side, the tech-heavy NASDAQ was down 0.6%, down about 70 points. And the Russell was also down about 11 points, down 0.7%. So a pretty mixed bag out there in the stock market today. And in this video, we're going to be talking more about the markets, breaking down some technicals, and I also want to share with you guys the top stocks that I'm looking to buy as we're getting into the middle of September here in 2020. And as we're seeing all this volatility, this selling, a lot of people are panicking, and I want to go over my thought process, how I'm viewing the stock market as somebody that's been in the markets for the better portion of this decade. So if you guys find value, hit that like button for me, consider subscribing to the channel, and check out all the free links down below if you want to join our Discord chat, our Facebook group, and if you want one free stock, free money from Webull valued up to $1,600 with a deposit of $100. That is also linked right down below in the description box. So in yesterday's video, we talked about the S&P 500 and all of these indexes at that being at very critical levels. And on the S&P 500, that specific level was 3330, right? And why was that a specific level that I was interested in and that I thought was very important? Well, it was because we held that point 3330 on the 8th of this month in September before rallying up to about 3420, and we called this a bull trap, right? And what do you know? We sold off the day after, and we held it yesterday as well, 3330 again at the close of the market. So I told you guys, I literally said this yesterday, if the S&P were to break 3330, that would be very bearish. That would mean that the bears are taking control in the short term, and they've already been in control, but it means that the bearish trend will continue, right? And what do we get today? We got exactly that. 3330 broke. Well, if we take a look here in the beginning of the day, it did not break. It did not break. We were rallying. The bulls had some hope, but it hit 3370, the S&P, sold off to about 3345, popped up again, hit a lower high, and then it was straight down from there, from 3355 all the way down to 3310. So this is not good. This is not good for the bulls out there, the fact that 3330 broke. And I also mentioned yesterday that if 3330 breaks, where could we be headed? Well, I said right around 3280. And did we get there today? No, of course not. But that's going to be a level that I'm watching for next week, right around 3280, 3285, as that does put us right around this 180 SMA here on the 4-hour chart. And hear me out. Another thing here that we're seeing on the S&P is, yeah, we hit that lower low in the downtrend. We hit that low in terms of this little sell-off that we've been in the past couple of days. I mean, we hit 3580. We went down to 3330, popped up, and now we're at 3310. So obviously the downtrend's continuing, but we're seeing another relief rally, right? So this could very well be another bull trap here on this 10-day, 30-minute chart on the S&P. That's if we fail to break out of this 50 SMA here, and ultimately those highs from earlier this week and last Friday, right? Until we break these resistances, the downtrend is still intact, and we could see that 3280 level that I mentioned earlier, right? And on on Monday and Sunday night, we'll take a look at the futures market together. And if we're gapping down aggressively, you better believe we might be going down to test 3210, which was the low today. And if we break that in the futures market heading into Monday morning, if we see a lot of red in the large caps, we could be selling right off the gate next week, and right out of the gate next week, rather. And on the NASDAQ, you guys can see here, we see a very similar pattern as the S&P, right? We broke the lows from earlier this week, right, at about $11,000. We held that on the 8th of September, as well as yesterday, right around 11,000, 11,100. And once we took it out today, that continued the downtrend. It made a lower low, and that is all the Bears want to see, right? That's what the Bears want to see, the trend continuing. And we closed the day on a nice little rally from 10,950 to about 11,080. So a nice about 130-point rally there. But ultimately, we're still under the moving averages here on the 5-day, 5-minute, on the 10-day, 30-minute as well. We're still under the moving averages, and we could be trapped here. This could very well be another bull trap if the NASDAQ does try and rally up and it gets rejected. So be careful. Next week, we could be heading under 11,000. Again, we momentarily were under 11,000 today at about 10,950. But I'm thinking if 11,000, we see a big leg down from there. If this 180 SMA breaks on the 4-hour chart, NASDAQ could be going to, like I said yesterday, 10,700. That is a price target that I do have here on the downside for the NASDAQ, as long as the bears are intact, as long as this downtrend is intact, and as long as the bears are in charge, which at this point in time, guys, they are in charge in the short term, that is. And when it comes down to the Dow was up today. Dow's the only one that managed to somehow keep that support from all week. It did not take the lows out, the lows being around 27,500, 27,450. That is where we held on the 8th of this month, on yesterday, the 10th of the month, and today, the 11th of the month, right? So this is looking good for the bulls. I mean, but still, it's the Bears are still in charge. I mean, the Dow's moving under the moving average is still both the 50, well, not the 50, but under the 180 SMA here, which isn't that great. We're seeing a bearish cross here on the 5-day, 5-minute, the 50 SMA crossing below the 180 SMA, which could signal more downside. And we're, holding 27,500, but if that breaks next week, if we see a big gap down, I think the Dow is going to be going down to, let's say, $27,000 flat, right around this 180 SMA on the 4-hour chart. That is where I think we're headed, guys. That is where I think we're headed, especially if we get that leg down next week, and I wouldn't be surprised. I really wouldn't be surprised. I mean, we've talked about how September historically is the worst month in the stock market, and history is repeating itself, guys, at this point so far in the month. So, if it continues going down, I would not be surprised, and it goes to show why I've been saying have cash on the side. In cases like this that we're experiencing right now, cash comes in handy because you're hedging, you're hedging against the market, because your cash position is not moving, you're not making anything, you're not losing anything, but the market is going down. So you're pretty much break even here with cash, as opposed to being in the market and losing money. So that's a good reason to have cash. And as well, on top of that, to have cash, a good reason is because you want to be able to take advantage of opportunities like we're seeing right now, and like we'll get into here in a couple of minutes. So for me, guys, and let me know down below in the comments, what are your thoughts on the markets, everything going on? Again, I'm bearish in the short term. I think we could be heading lower, and again, that's why I'm cash heavy, but I'd love to know what you guys have to think. Let me know down below. And in terms of what I did today, I didn't really do much. I actually tried day trading Beyond Meat earlier on in the day. I actually just caught it. I actually got caught in a bull trap today, to be honest. A little bull trap. You guys can see it. We sold off pretty aggressively, or is this a bear trap, bull trap, whatever you want to call it, guys. But we got sold off here from 145 down to about 136. This pull down suckered in some bulls like me, right? I got in at 138, thinking that this was going to reverse off that old resistance, which it seemed like it was holding as a support, right? You guys can see it on, let's say, let's pull up this 4-hour chart so you guys can see it. It was holding 137, 138, which, if you guys take a look, I mean, that is where we've struggled for months, weeks on Beyond Meat stock. So I was thinking, hey, 138, if we hold this, we can gap up to 145. In theory, that was a very good trade, but reality was different. It did not happen that way. I got in at 138. I got trapped. We sold off, and I ended up getting out, taking a loss at 136. Roughly 136.50, I think, is where I filled, and it wasn't that crazy of a loss, quite honestly, guys. I was a bit tighter on that stop at about 1%. And it's really because of the markets being very volatile. You know, we could swing either direction, affecting individual stocks. So I didn't want to get too risky today, especially on a Friday. So I just cut it loose and just cut the loss there. And I'm still in some other stocks here that I've been in. Didn't really add anything, didn't sell anything in terms of those stocks, just holding them. And those include Workhorse. And shout out to Workhorse today, guys, up 6%. Up $1.30. I'm loving it. It dipped down to $21.80. It rallied off that low, which is very strong. And I'm personally in at $23 per share, right on the money there at $23. And I'm up on my position a decent amount here. And this is one that I just plan on swing trading and holding for a decent amount of time here. And Tesla is another one that I'm in here. Not too crazy of a position, but I have averaged in. The last time I bought was, I believe, 2-3 days ago at $355. And I'm in at about $400. And this is one that I'm down a little bit on, but overall, I'm not sweating it. I'm holding on to it. And I think there is potential off of this 180 SMA back up to the mid 40s, not 40s, 450s, which is why I'm liking it. And I'm still in Apple, which is not doing too well. Today down about 1.3%, down to 112. I'm in at 125, so I'm down a bit there on Apple. And I'm still in my gold holdings, which you guys know if you've been following me. I love gold as a little portion of one's portfolio. And that's not financial advice, by the way. Always do your own due diligence. I like it for my portfolio. Let's reword that. But yeah, I'm still in GDX, which is a gold miners ETF, and I'm still in GLD, which is an ETF that tracks the price of gold pretty much directly. So that's what I'm doing right now, guys. I took a little loss there. Workhorse, Tesla, Apple are my main swing holdings right now, and I'm in GDX and GLD as kind of a hedge there. And I'd love to know what you guys are doing. Let me know down below in the comment section, please. I'd love to talk to you guys. And let's get into some other stocks right now. We have FedEx earnings coming up on the 15th. And if you guys have been following FedEx, UPS, they've just been hitting home run after home run after home run with these earnings. Maybe not all the earnings in the row, but the past earnings were great. The past earnings report was great for FedEx. It went from $130 per share all the way to where it is right now, $230. And we actually got an analyst, I think, make a buy rating today. Am I wrong? Maybe not a buy rating, but they actually, they're maintaining a buy rating. That's Citigroup, and they're lifting their price targets. Wow, look at this one. At Cohen, they lifted their price target from 167 to 260. At Citigroup, from 235 to about 260. So yeah, I mean, this stock could be going to the 250, 260 level, right? It seems like we found a base support at about 220, 225 on the 4-hour chart here. And if we pull back a bit on the 3-year chart, I've been telling you guys this stock's still beaten down. I mean, yeah, it's recovered immensely from 88 to about 230. That's incredible during this crisis, but the highs were at 275, right? 275, and that's around, let's take a look here, 15% away. And yeah, we're a bit overbought. Our size off the page a bit here, 77 on the 3-year chart, so that's a bit dangerous. And the stock could be priced into perfection. That's another risk that you have to understand with FedEx, since it's up and up and up so much. I mean, it hasn't really pulled down. This could be priced to perfection to the point where if they disappoint a little bit in earnings tomorrow, if their guidance slacks a bit, then the stock could get hit 10, 20%. 15%. And then that could be a good entry point. So we have to be careful. You know, it could be a nice play from 230 up to about 250, but it could also, if they miss on earnings and the price is priced to perfection, the stock, right? Let's say they miss on earnings and it sells off to 200, let's say, for example, and it goes to that 180 SMA on the 4-hour chart, that could also be a great entry point. And quite honestly, I would rather it go down. I mean, that's pretty selfish of me to say, because I'm not in FedEx right now. I'm sure the FedEx shareholders watching the video, they're like, Stas, screw you, man. I don't care about you. I want that stock to go up. But me, yeah, I want it to go to $200, guys. I'll be honest. And I'll pick it up at $200, but I doubt that happens. I'm leaning more towards it, probably consolidating a bit or maybe even going up after earnings, although I don't even play earnings like that. I like waiting until after. So I'll update you guys in next week what happens in terms of FedEx, what I'm doing, and we'll cover the stock and so forth. And another one here that didn't have the best earnings, yeah, but it's slowly starting to come back is Slack Technologies, ticker symbol WORK. They pretty much disappointed in terms of their billings growth. A lot of people thought that they were going to grow a lot more than they did. They still grew, but they didn't grow up to what people were expecting. And that's kind of goes to FedEx in a way. Not comparing the companies whatsoever, but it's that mentality that, okay, if the company disappoints, and the price of the stock is up before earnings, the stock could tank. I mean, this one was up from 27 to about 35 in anticipation of earnings. Investors were probably like, oh, Slack's going to do very well. Let me buy in. And then all of a sudden, from 35, it went all the way down to 23. So not saying that's going to happen to FedEx, but I'm just saying be careful. Anything could happen, guys. And just be prepared. So work at this point, yeah, they didn't do great in terms of their earnings growth and so forth, but you have to ask yourself, was this an overreaction? Was this some sort of overreaction? Could the stock maybe see some sort of a relief rally back up to the high 20s, maybe low 30s? I think so, right? I think so, and that's why I'm watching it here. We saw something similar, last earnings, 2 earnings ago. The stock actually got hit before earnings. It was down all the way into earnings, and then all of a sudden it reversed back up. Last earnings, it rallied. It did the same thing as it actually just did. It rallied into the earnings, then it sold off aggressively from $40 down to about $30, but then it ultimately bounced back from 30 to the mid-30s. So from here, 35 down to 25, who's to say this can't bounce back from 25 to back to the mid-30s? That's possible if we see that relief rally like we saw after last earnings report. So we have to see, right? Another one here is Uber, ticker symbol UBER. This is one that broke a big resistance, $35. Now it seems like it's filling the gap all the way to about $38. So for me, this move seems like, yeah, it could have already been made. It might be too late to get in right now, but quite honestly, a pull down anywhere from $35, $50 to $36 could be exactly what we need to buy into the momentum here with Uber. And even if it breaks above 38, guys, we've seen the high here on the 4-hour chart be around $40, $41. If 38 breaks, we could be going to the low 40s. So I think there is potential here on Uber on this momentum. I'm liking it, especially that $35 break resistance. That was very, very huge for Uber. And a tech stock here that's at the low 200s, about to crack under 200, is Microsoft, ticker symbol MSFT. And this is getting interesting, guys. It's about $30 off its highs on this 4-hour chart, those all-time highs at 230. That's around a 12% sell-off. So we're getting into that correction territory, right? We're getting into that correction territory, and we all know that a 10% sell-off from a peak is considered a correction, and a 20% sell-off from a peak is considered a bear market, right? So will Microsoft, these tech stocks, get into a bear market soon? Very well could happen with the way some of these are moving. Some of them already are. Some of them already are 20% off their peak, which, again, technically speaking, that is a bear market, despite us maybe not being in a bear market in the stock market, at least, since, we're close to all-time highs. But you guys get the point, right? Microsoft is at a pretty big support now as well, right around 200, 202. That was a resistance from back towards the end of June. We held it as a support all throughout July, heading into August, middle of August, before we rallied all the way to 230. So I'm thinking this could be a spot Maybe Microsoft sees some sort of pop. We're seeing a double bottom here potentially forming at 200. Maybe if we rally out next week to 210, 215. But like I said earlier in the video, I'm kind of bearish on the market. So if we do see that leg down across the markets here, Microsoft's going to fall as well. Since it is a large cap, it is going to go with the big stocks or with the big indexes, right? It's going to follow those for the most part. So if we break 200, watch out below, guys. Microsoft could be breaking this overall trend. I mean, it already broke the trend. The moving averages here on the 4-hour, those are no longer support levels. So if 200 breaks, mid 190s is coming. 195, I'd say that's the next level of support where I'd see Microsoft get to. Then from there, we might see some sort of relief rally, maybe from 195 back up to 200. That's kind of how this could work out. That's if the markets do see that leg down, right? And again, anything could happen. Be prepared for anything out there. And another one here that's breaking out is Snapchat, ticker symbol SNAP, up about 4% today, up 90 cents. We broke out of $23. That's a big resistance here on Snapchat. Now we're about to break 24.80, 24.70. That's the next big one coming up. And from there, I'm looking to see if Snapchat can get into the 26s. I mean, we're seeing overall, it took a big hit after earnings, and it seems like we found that support, that bottom after earnings, right? It's been cooling off, settling a bit after earnings, letting the dust settle, kind of. That's the way I'm looking at it. And it's turning back up now, right? It went from 25, it settled a little bit at about 2021. Now it's starting to reverse back up. So if 24 breaks, guys, or we find some sort of consolidation within 23, 24, this could be an entry point on Snapchat up to about $26. That's what I'm looking at here. And two more companies that I want to talk about, two more stocks. Pepsi took a big sell-off from about 144 down to where it is now at about 135 over the past couple of days. That's a sell-off of close to 6%. Notice how we got rejected. Well, momentarily we were actually above 135, 138 actually, which is a big resistance. But now we're trading under it again, but we're still holding the uptrend. So we're in this wedge where we're under 138, big resistance, but we're still holding the uptrend. So if we end up rallying out of about 136 resistance, maybe we could push to the 140s again, mid 140s. That's kind of what I'm looking at here for Pepsi. And mind you, Pepsi is reporting earnings on the 1st of October, which is a bit away. That's about 3 weeks away, but just keep that in the back of your head. And Pepsi's pattern is very similar to Johnson & Johnson's, right? We're seeing a bit of a sell-off. We're ultimately holding a support at 147 here on Johnson & Johnson, which was an old resistance. And I'm thinking we could make a move here back up to the mid-150s. This is a stock that I love more as a long-term play, kind of a stable dividend play for Johnson & Johnson, but I also think it has some price appreciation. Again, if it holds 145, 147, if 150 breaks, I wouldn't be surprised if we saw a move from 150 to 155, a move of around 5%. And yeah, it's not the flashiest stock. It's not going to go 100% up like some of these EV plays like Workhorse, NIO, Tesla, Nikola, although Nikola they're facing a lot of trouble right now. But yeah, it's not one of those, but it's more stable. It's a bit safer, quote unquote. Nothing's extremely 100% safe in the markets, but J&J is pretty much as safe as it gets. Same there with Pepsi. And overall, guys, that's pretty much it. That's pretty much it for the video. I hope you all had a fantastic week in the markets. It was a pretty funky week. It was a difficult week out there. And one thing to leave you guys with for the weekend, don't force anything. Always have that cash. I've been saying this. I feel like I'm preaching a broken record right now, but don't force anything. Wait for the opportunity to come to you and let the market play out. Let the market play out. That's kind of what I've been doing this week. I've been buying positions, but I haven't really been forcing anything because I understand the markets have been very hot. They're overheated. They're in need of a pull down, and we're finally getting it. So if you guys found value, hit that like button for me, subscribe to the channel, and join our Discord chat and our Facebook group. Those are free to join. They're linked down below. And don't forget to claim your free stock from Webull. That is valued up to $1,600. All you have to do is deposit $100, and that is how you get your free stock. I also get a free stock since it is an affiliate link, and I do appreciate you guys a lot if you do use that, as it does help me out and all the free content that I'm putting up here on YouTube. So I'll catch you all in the next video. Thanks for watching as always. Be safe out there, guys. Peace out.